Hello fellow traders everywhere, Adam Hewison here, co-founder of MarketClub with your weekend update for the trading week ending February 24th. Well, it's been quite a month already for stocks and a lot of other markets, but this week we have something new for you. We actually have the biggest weekly winners on losers by sector. I think you're going to really enjoy that. So we covered 9 sectors, starting with consumer goods, going all the way through utilities, and we show you the biggest winners for the week and the biggest losers. But let's get started. As you normally do, looking at our markets, which is the S&P 500, we go to our portfolio, and you see we have a plus 90, and we're looking at a weekly chart right now, going back all the way to 2004. And as you can see, we've just taken out the highs that were seen back on April of 2011, so this is a good thing for the S&P 500. And we are clearly in an uptrend in this market. Now we're going to do an in-depth analysis of this market next week, so be sure to check our blog every day to make sure it's there. I think you're really going to enjoy it. It's going to give some really strong projections of what we see for this market. But for the week, the S&P closed up. Let's close this in a little bit so you can see a better picture. We closed up just 0.33%, but still a positive week following last week's big week, which is 1.38% on the upside. So looks like the trend is clearly intact, and we'll see this market move higher. Looking at the Dow, much the same picture there. The Dow closed higher for the week, up 0.25%, following another strong week earlier, and it looks as though this market's going higher. If you go back to, let's say, a one-year chart, you can see we've clearly taken out the previous highs that was seen back in May of 2011. So this market looks like it's got a nice base to carry it much higher. A lot of people aren't in these markets right now, and that's what's, I think, very low volume, but I think there's a lot of people on the sideline wondering, well, I'm in bonds, should I get out of bonds, get into stocks? Somewhere along the line they're going to have to make a decision, and I think the more and the higher this goes, the more people will say, I've got to get in, I've got to get in. Here's the NASDAQ making back 11-year highs. Amazing. So here we are. Market's looking very strong. We go a little further with that. Let's see the 5 years. So you can see we clearly, if we just put one of our tools on here, hold on. And you can clearly see we've really broken out on the upside here. And I just have to put my trend line on, which I'll just go from here to here. You can clearly see we've broken out to the upside, and this market is going to go higher. So let's take this off the screen. Let's go to our next market. Kind of a change in pace in silver this week. Silver was up 6.33%, one of our biggest winners for the week. It has really sort of broken out to the upside. Let's close this in just a little bit further. And let me draw one of our trend lines in here. We'll go from the highs. This is a weekly chart again. And you click here, you see the little yellow box here, and then you simply draw a trend line here. So it's almost there. It's right up against the trend line. It has broken out, but this is definitely a strong signal. If you put our trade triangles in, you can see we've got a plus 100, indicating the higher. We had a trade triangle positive this week. You can see on the daily charts. And it looks as though this market wants to do better. We just turned up on the MACD, which is a little lower. You can't see that, but that's certainly something that you want to be aware of. So going to our next market, and that's going to be the gold market. The gold basically put in another solid week. Is up 2.82%. Not as strong as silver, obviously, but it's still remaining in a trading range. And this is, I think, this is the frustrating thing for a lot of traders. It really hasn't broken out of this range. 1800 is a very strong area. This market's going to have problems, and this is what we're looking at, and I think this is where we're seeing some of the challenges come up. If we look at this market, this is the area that we're talking about, this 1800 level, and we got close to it this week, but not quite. It really needs to close over this area. I think if it does that, then we're off to the races, and we'll see this market go higher. But right now, it looks as though that's the top of the range. And you've got silver under the trend line, so we may not be seeing much of this action anytime soon. One thing is concerning is inflation. We'll talk about that a little later on, but this potentially could be a very big sort of energy field to push this market higher, and for the bulls to see that mythical $2,000 an ounce level of we've all been talking about. So let's clear the screen and let's go to our next market. And the next market we're going to be looking at is going to be copper. Copper actually put in a good performance. It's a plus 65 on the trade triangles, meaning it's still in the trading range, but it did manage to close up 4.14%, actually better than gold and not quite as well as silver. But copper tends to reflect the economy. The economy seems to be going better than most people are anticipating. And it's not just our economy. If you look at our global strategy portfolio, where we cover 5 different world economies, out of those 5, 4 of them are in a positive mode on the upside. So demand in there, the 2 of them are from India and also China, obviously big players in this area. So they're the ones to watch, and it looks as though we're going to see copper move higher. Long term, our monthly trade triangle is still positive. The weekly just needs to turn up, and once that does, that will be a move over the 4 level. Once it turns up over 4, then we're off to the races on the upside. So something to watch this coming week. Looking at the next market, and this is the big market to look at, is crude oil. We're plus 90. Crude oil put on a very good performance for the week. 2 big weeks. We closed up the week 5.24%, which is obviously a very strong close. And it looks as though we'll see this market go higher and challenge these highs that we saw back here in April of 2011. That was around the 114 to 115 level. 114 is the next big challenge. Certainly 110 is an area. If anything happens in the Middle East, and that's such a powder keg, nobody can predict this, but certainly the markets are telling you this is to be concerned and nervous. The one thing we've been drawing on every week and showing you and explaining to you is, I'm going to put a simple line chart, take our triangles off, and that is this head and shoulders base, which we think is very, very powerful. And again, if we just simply draw a trend line, you can see clearly it broke out where we gave you a special report, which is still up on our blog. You can read it on crude oil. And what this meant to us was basically that we have seen a formation, which I think is very familiar to a lot of traders. It's a head and shoulders formation like this, and this is the right shoulder. This is the head. And we'll also have a look at the left shoulder, which is right here. So again, these are very important elements. You've broken out right here. And this has a target zone. I'm just going to put TZ for that, of about 120 to 125. So that's the target zone we're looking for in crude oil. This is the April contract we're looking at, and I think that's definitely something one should be looking for in the very near future. We're looking at actually a very short time frame, about 4 to 5 weeks from now. We think prices will be headed at those levels, and this is based on technical analysis only. The exterior, the world events have nothing to do with us. We have no control of it, but we're looking for this market to go higher. So let's take everything off the screen, go to our next market, and that's going to be, this is a weekly update, by the way. We're looking at the markets on a weekly basis and weekly charts. And this is the United States Oil Fund. Now this is also, you can trade the oil, but look at the formation. It's very similar to the crude oil formation, so I'm pretty happy with the way this is tracking. So you can look, that's the same pattern we looked at right there. Let's put our trend line in here. So let's go from there to there. It's the same head and shoulders formation. And for the week, this market closed up 5.83%, so it tracked very closely the crude oil, which is up 5.15%. So pretty happy about that. It looks to me like this market can and will go higher. Certainly we're looking at the 45 area as the next major target zone, but the potential is for this market to go from, let's say, 31 to let's say 39, that's 8. We could be looking at 46, 47 on this market quite easily. So let's see how that plays out. But generally speaking, I wanted to show you the USO, which is an ETF, actively traded, one of the most popular ETFs that's out there, and it looks like that wants to go higher. So let's go to our next market, and that's the Eurodollar. The Eurodollar, I think the bears have to be a little bit careful on this, because I think a lot of people got very, very short the Eurodollar, thinking Greece is going to get kicked out, probably will, but they sort of underestimated the strength of the euro-dollar. Let's just scope this out a little bit higher, and if you can see a couple of events that I'm looking at that may be very interesting to other traders, but let me just put this here. Hold on. Let me just go to my illustrator because I want to show you these events as they occur, and here they are. Here's a low period right here. Here's the same low period, and here's the same low period. The one thing that's really interesting to me on this whole event is basically the cyclicality of this currency. So you go from here to here, here to here, and it's pretty much the same time window. So if that's true, then we should have a move like from here to here and from like here to here. So the question is, around the 145, 150 area, are we going to head back up there again? Now we're trading at 134.45. Can we have another move from here up to this area again? Why not? It's very possible. Things may just suddenly appear to get better for Europe, and maybe that's the recovery we're looking for. I don't know. We'll have to see how that plays out. But generally speaking, if you look at our trade triangles, I'll clear the screen right now. If you look at our trade triangles and put the monthlies in, you can see only the monthly is the only one that's negative from 139.69. You can see the area right here. So generally speaking, the weekly is positive from 130.74. And the daily is also positive from 131.96. So again, short term, intermediate term, positive, longer term, still a little bit negative, but that could change. But generally speaking, the cyclicality is what caught my eye on this market. So let's take that off the screen. Let's go to the dollar index. And it's pretty much the same thing with the dollar index too, because the dollar index obviously reflects a basket of currencies, and we could be seeing this market in a more of a negative mode. Longer term it looks positive, but short term and intermediate term it's negative. And we're at a minus 60. We need a trading range. We are a little bit oversold, but we've just turned down in the MACD, so I would expect this coming week we'll see this market a little bit more on the negative side. Also, if I just put in our charts, I'm going to show you this one thing very quickly that you may have seen. I'm going from the highs to the lows right here with the Fibonacci tool, and we're looking, if we get down to the 77.39, let's call it 77.40. If we get down there, there's a 61.8% retracement, and that should be an area that should provide some support for the dollar index. So let's see how that plays out. And let's go to our next market, which is the Reuters CRB index. This is the one I really want to pay very close attention to. The immediate thing that stands out to me here is this. I'm going to scope this in just a little bit further so you get this picture. By the way, the dollar index was up last week 2.68%, so it's a pretty big jump for this particular index. But let me scope this out just a little bit further, and you'll see the picture I'm looking at. So first of all, we have broken obviously this trend line that starts from up here down to here. See the points, you had all the points, the 1, 2, 3 points, boom, broke it up. That was the first indication. Now the other thing that I'm looking at is this, and I'm just going to scope this out, is we have a low here and a low here. So very important lows. It's a double bottom, and also if that's a double bottom, then this must be a pivot point. We've broken over the pivot point. This is a new high close. It indicates to me that we're going to see this market go from, let's say, the 295 to 225. That's 30. So it could be to the 255 area, which is right around here. So I think around this area here, I think we'll see the index go, which means gasoline is going to drive this. Crude oil could drive it. It's a commodity-driven index here. CRB has been around forever, and it is a great source of information for inflation. You can see this area here, when back in, starting in, looks like August of 2010 all the way through 2011, looks like the market was higher. But generally speaking, it looks like we just want to be really, really, really careful. That's just, excuse me, August of 2011 all the way through to current date. So let's see how that works out. Generally speaking, the trend was very strong. We had a big correction. We've just started to turn back up again, and I think it's really something to watch very, very carefully. So we know inflation is coming because it's higher prices for gasoline. It's going to translate into higher food costs and so forth and so on. And we've just turned up in some other indicators. So let's just clear the screen. And I think that's going to do it for today, this weekend. I hope you're all going to have a great weekend, and Oscars this weekend. So I hope you're all Oscar-winning traders this weekend, and enjoy the weekend. Adam Hewison for Market Club. I'll see you next week right here, Monday. Remember, we have a special report on the S&P 500 that you want to see. So have a great weekend, everyone.